Alright guys, and welcome back to this quick video here. Today I want to show you how I use standard deviation, and I have a perfect example how to project standard deviation and how to use it to find possible entry points. And today I have a perfect example for standard deviation, and by using this model here I've made almost 2 grand this week. So this is a new funded account on Top Step, so you can see this here on the top. The yellow text means it's a funded account. And you can see I started this funded account last week. The first week was actually bad, so you can see I had one big winner, but some small losses here. But this week, it turned out to be a really great week, and I've made $2.5 thousand here on this account. And I was only using this model. I have a really low frequency, so you can see 6 trades doesn't. So for example, here on Monday, 6 trades doesn't mean I took 6 trades. It means I took 6 contracts. So I think I took like 2 trades max a day. So that's it. And but now let's start explaining this trade. So at first, what I would like to do is to go on the daily chart. I'm going to explain also what standard deviation is and how we can use it. So at first, I think we can delete this here. What I wanted to see, so we can see here, we had a really strong reshape reversal. So you can see on Monday we had a really strong green candle here, and then we had on Tuesday we had a really small range daily candle here. And what I wanted to see was a sweep either of the high or the low. And before that I do nothing normally. So most of the time I wait for a previous daily high or low sweep. So we can mark this out here. And now we can go back on the 4-hour chart. Yes. I would say there was no clear fair value gap. I mean, we have a bullish fair value gap here, but I don't really care about this. And this was on Monday, and we touched it already, so it wasn't really relevant for us. But most of the time I take my daily bias from the daily chart and the 4-hour chart. But today I can't really see something on the 4-hour chart. So let's drop lower on the hourly chart. So what you can see here, you can see, so normally I start trading at 9 AM. So this is the 9 AM candle here. And you can see we almost swept this high here. Or I mean, what I mean is ES took it and NQ did not. So I think we can see this a bit better on the lower time frame. So normally I wanted to see so this was the previous daily high, and you can see we did like NQ did not take it. But ES took it, so we had SMT here. So I think we can draw this out here. SMT ES. So this was the reason why I still decided to short. And so now let's take a look why and where I started to draw out standard deviation, because this is the main part of this video here. And what I basically do is I look at the 9 AM candle. So most of the time I'm starting to trade at 9 AM. By the way, this is the wrong time zone here. I just realized. I was wondering already. It's New York time, but oh no, it actually was later than 9 AM. Okay, sorry, my fault. But what I do is I look at the current trend, so on the short-term trend. And so I started to trading right somewhere around here. I think you can see my mouse here. So let's say I started to trade at 8 AM. This is where the blue line is. So this was the hourly open. And then I look, okay, and I'm trying to figure out, okay, what direction are we trading? And you can see we still had something like a bullish uptrend here. And then I'm trying to figure out, okay, what manipulation down caused this up move here. So now we have to figure out, okay, which low created this momentum here? Because, like I said, we were bearish. We have bearish daily bias, so we are looking for shorts. I mean, at the moment we have a small little bullish uptrend, but we are trying to find a point where you can look for potential shorts. So, and now we want to find a lower time frame low that caused this up move here. And so we can take this here, for example. And yeah, I don't really like the other ones because there's no last high that caused this down move. So for example, here you can perfectly frame out this one here. But for example, here there's like the last high is here. So this range here is way too big. And yeah, same for this one here. So you can see you can't really use standard deviation here. So now we are using standard deviation here. You can see I started to draw out from this low here to this high here. And now we are projecting levels in the upside direction. And now it gets a bit complicated, but I'm looking for two different levels. So what we're doing with standard deviation basically is we are trying to anticipate possible reversal zones. Like I said already, we have bearish bias, so we're looking for shorts. And now we are trying to figure out when could this move here, when could this move here over? Like where could be a possible reversal zone? And when we project these future levels here on standard deviation, I only look at two different levels. So the first zone is the zone between the -2.5 and -2 zone. So it's basically this zone here. This is the first reversal zone. And the second one is, it's the -4 level here. And what I always want to see is I want to see alignment. So I'm not randomly shorting into this block here. I want to see old highs or old lows around this level here. And we perfectly had this here. So this was the London high here. I think write this down quickly. London high. And that's what I want to see. So you can see the London high here was perfectly around this zone here. It doesn't have to be perfectly in this zone. It could be also okay if London high would be a bit higher, but it's perfect like this. And that's all I want to see. And this was enough for me to look for shorts around this area here. And also in combination with the SMT with the S, this was a perfect short signal for me. And what I did was, normally I'm using breaker blocks or inversion fair gaps or fair value gaps as an entry, but here there was nothing. And I really wanted to get in because I think this is an A+ setup. So what I basically decided to do was, so we had a bearish close here, and then we had a small up move here, and I basically decided, okay, once we close below this last leg up here, I want to open a short position. So I placed my order somewhere here, stop loss above this high, and my target was this low here. And you can see this is basically how the model works, because you can see we get 5R by doing this. And this also perfectly explains why I have like some smaller losses here. But once you catch one winner, you can make really great money on this. You have to stay consistent. So you really have to try to keep your profits really, your losses really small. But you can see once you have one great week, you can make really great money by doing this. I hope you can understand this. And what you can also do is you can project standard deviation to find potential targets. I don't do it at the moment, but same procedure for here. You can TP at the -2, -2.5 level. This is the first reversal zone. You can also wait for -4. I don't do this at the moment. I like to TP at lows or I don't know, premium discount. But that's basically what I do. I mean, this low here could have been also a potential target here, but at the moment I like to get out really fast. Like this was a really quick trade here. I think only like 3 minutes or something like this. But and if you have any questions about this, just let me know, and see you next time.